But with positive cash flow, don't you need, like, for one of your deals, don't you need like 30% deposit? Not for bit harder for some people to get that much money.
It depends which way you do it. There are second-tier lenders that are doing up to 95%. Obviously, the interest rate is high.
Really?
Yeah. The way the lender structure happens, and I'll tell everyone. Columbus Capital is one of the bigger funders of the second-tier lenders that do this product, and there's Granite and there's Blue Horizon. There's a few that do it, but they use Columbus Capital money. And you want to do an 80% lend, good, interest rate 6.5%. You want to do interest only, good, it's now 6.75%. You want to do 95%, well, now it's at 7.5, 7.6% P&I. So there's levels and steps that you want to go to. Regardless, though, there are products out there, and that can only mean one thing, and that's that a Big Four lender is coming into the market soon. Because they realize that this is actually something that they can lend against and it's got security. Their concern has always been that what's the risk if the mortgagee, if it happens to mortgagee in possession, we have to take back the property. And, talking to one of the Big Four lenders recently, they said, oh, we've got to get all the people out and then we've got to resell the product. I go, what are you talking about? Like, why would you move people out of a cash flow positive property? Like, if a commercial property went under, would you move the tenant out or would you sell it as a going concern? They said, well, it's a going concern. I said, well, it's the same with this product as well. Why wouldn't you sell something that's already positive cash flow returning, and you can sell them at an 8 or 9% cap. So they're starting to open up and realize that there are others. You can go for commercial lending, which will be 60 or 70%. But really, there are products out there that'll do as a residential lend.
What yields are your properties getting? If you're borrowing at 6.5 and they're positive cash flow, is it different from a conversion type one or a brand new build?
Slightly different. It depends if you can hit the market. I mean, at the peak of value in the Perth market, we were getting new builds at 14%. Like, that was absurd. Like, they were outliers, but we were generally picking up, between 11 to 13% new builds in Perth. Obviously, the prices rose and the yield dropped out. But at the moment, I can go to Victoria and get 11% return on a conversion, probably a 9.5 to 10% on a new build. So, the market's there and it's doable.
And good depreciation
new
too.
New build depreciation, I wouldn't know much about depreciation. And I can send you
I know a guy.
I know a guy who knows a guy. But yeah, I mean, you're talking in the first year of, you've got sometimes more, but on average, there's going to be 5 or 6 kitchenettes, 5 bathrooms, 6 bathrooms, the higher depreciable items in a property, plus you've got a furniture package that's got a 1-year depreciation on it. You're looking in
a job.
You're now looking at, you can tell me, but $40,000 to $45,000 in the first year of depreciation. Yeah. So.
Yeah. And what makes an ideal conversion? What are you looking for when you're buying these, or is that trade secrets?
No, it's pretty simple. I mean, learning how to design them is one thing. So, like, I can tell you what I'm looking for. I'm looking for plumbing points because I need to put more bathrooms in. I'm looking for a floor plan that doesn't require what we call a split room. So a split room will be, you have the actual bedroom on one side of a hallway and they've got to leave their door to go to their bathroom. I will never do that. So that floor plan has to make sure that it meets that requirement. And people always say, yeah, but what about, you're going to have to dig up concrete floors, because most of the projects we do are on slab, but we do all our plumbing above ground. So if I've got a laundry in the garage, well, that means I've got a bathroom point that I can convert the garage into a room with a bathroom and a kitchenette, and we run all the plumbing above ground, so we have a raised floor in the bathroom, and that means that the wall behind the garage will also be able to have a bathroom put in too. So I've already got 2 bathrooms out of 1 point. So, they're the things that we're looking for. We're looking for a 20 or 30-year-old 4-bedroom, 2-bathroom slab construction home with a good floor plan and good plumbing points.
And would you choose, if you had to choose one, whether it's a new build or a conversion, what would you choose?
If it was 4 years ago, I would probably choose a new build. At this point in time, in greenfield estates, in some areas of the country, I would stay away from a greenfield build. And when I say greenfield,
Well, people
Yeah,
want a greenfield
greenfield
is
is that
greenfield.
type of big block developer. They go and buy a piece of farmland and they get approval to chop it up into little rectangles. The reason I want to stay away from that at the moment is that we're finding in some areas, so because again we're property managers, we're finding in some areas that we could drop our price to $100 a room and they're generally averaging $350, but we wouldn't be able to fill them at $100 a room because there's no eyes on it. And then they're too far out and there's an oversupply in some areas. Okay. So we consult to a number of builders and we say to the builders, look, we've done this estate, we've done the checks, we've done the zones, we've done the overlays, we're all good. You can sell that block of land with co-living. I suggest you only sell 3 in this release. Now, that's well and good, except that I don't have control of every builder in the country, and every builder in the country has now jumped onto co-living, and they're building 5, 6, 7, 8, 9, 10 of these properties in the same estate, and so I don't have eyes on that. So for me right now, the answer to the question is I much prefer to do a conversion on an existing property for 2 reasons. One, because I can get in and out of the property. So our construction, my builder's license, my plumbing license, my real estate agent's license. So I decided if I was going to do 3 professions, I'd probably choose the 3 that are the most untrustworthy professions in the industry.
Good job. Why don't you sell cars on the
I
side?
have been thinking about taking up prostitution too. So the reason is because our construction team takes 21 working days on site to do the conversion from a 4-bedroom 2-bathroom to a 5.5 or 6.6, and then another 9 days of furnishing. So within 6 weeks, we will have a fully converted product. So it means you're out of and generally have 1 or 2 people moving in the day it gets advertised. So you're not out of pocket for more than, let's say, 8 weeks of where generally a renovation of this size. And I'll tell you, the renovations are $200,000 plus. That's what it costs. That sort of renovation would normally take 4 to 5 to 6 months for a standard builder to do. But we just cookie cutter. Everything's the same. Everything's in and out. We do it with quality. We do what we need to do to get the rent we have to get. There's no use putting granite bench tops into a property when it's not required, right? So and so we're unemotional about that part of it. We're emotional about making sure that the people that live in it are actually getting better off. So that's the first reason that we get in and out really quick. The second reason is because of the lack of ability to oversupply. So if I buy a house in a street that has 50 houses and I do a conversion in that street, 1, there's not going to be a parking problem. 2, they're not going to convert the 50 houses. There's probably unlikely that there'll be another rooming house in that street. So that means that we'll be able to fill it quite easily. So that's my preference at the moment. Long answer, sorry.
And whereabouts are you doing? Melbourne?
So we currently do 3 states. We do Queensland, Victoria, and WA. We're adding Tasmania and New Zealand as we speak.
Oh, right. Why not Sydney?
New South Wales, I wrote the New South Wales co-living policy, and the one thing that I wanted in the policy was the thing that they removed. So in New South Wales, if I want to build a house or a granny flat, I can go to a private certifier and do what we call a CDC approval, which means a private certifier ticks off on that and then hands all the documentation to the council. For the co-living product, they said there's no way we're giving it to a private certifier for approval. You have to go to council. And when I've got to deal with council, I don't deal. Because if it's my own personal deal, I'll take the risk. But when I'm dealing on behalf of a client and I don't know what the outcome's going to be, I won't deal with it. So unfortunately, in New South Wales, we won't do co-living. But in the other states, I can go to a private certifier and get approval within 2 to 10 days.
Awesome. All right, final question before we get into my world famous 10 with Ty questions. Is it possible to get capital growth and a high yield from your developments?
Yeah, I busted that myth in 2009. So you can do growth and cash flow in the same deal now because of co-living. And now people say, yeah, but what about the capital growth? The capital growth is exactly the same for a suburb. Capital growth doesn't happen on an individual product. It happens on the suburb. So whilst people are getting 2.6% gross yields in metro areas, we're getting double-digit returns. So you can do growth and cash flow. You can help the market out. You can help the community out. and you can help your finances at the same time and hold on to properties that will pay you while they grow in value.
Everyone's a winner.
Everyone's a winner. Take your ticket.
Do you own an investment property? Washington Brown has helped over 250,000 property investors pay less tax with the depreciation schedule. Visit washingtonbrown.com.au to pay less tax today.